Good afternoon. This is Peter Reznicek from ShadowTrader.net and Weekly Options Advisory. And given the state of the market of some selling we've seen lately, I thought I'd just do a quick technical rundown on majors and a couple of sectors and a little bit of market internals information. If you recall from my weekend edition video of almost a week ago, I said that there were strong odds the market would actually move lower this week, that this time it's different. The market has moved definitively lower, especially today. I'm speaking to you on Thursday. And so let's just take a quick look at technicals here. So there's not that much damage thus far. And obviously this takes time, this can change, but there's not that much damage thus far technically to the S&P. You've got a low here at 5,800 in this area that is probably going to be in play and could be bought, which would really just mean that we're just kind of rotating within this channel. And, in no way am I talking bullish here by any means, but you'll see in a moment when I show you some of this other market generating information that's kind of part of this whole bigger puzzle, that it's not that bearish. And what's important to note about that statement is that I can only speak about what is happening right now at this moment, right? So I can say it's not that bearish right now, but that could certainly change, right? It could be a week from now, we could be at 5,600, and it is that bearish, right? But you can only really go on what information you have at the moment. So S&P, I think, somewhat lower, at the very least, to the channel low here. And in the Nasdaq 100, we also have a channel low coming up. However, I wouldn't put too much weight into this one because it was kind of broken in here, right? You can see that the channel kind of got broken here. And to me, that kind of changes the calculus a bit. So I'm not actually looking at that. I'm going to actually delete this. That removes the channel. You can see these trend lines here have been broken. And we're just going to focus just on this prior low here, basically. I think that's important, is the fact that the Nasdaq parked itself on this Thursday right at the 20,550 where there was a support level. So it's kind of do or die. So one of the scenarios you may want to be looking for is that if we have a gap up tomorrow, and we do have some economic data at 8:30, if you have a gap up and then you retest, well, remember, you're not just retesting the low of Thursday, you're retesting this low as well. So this low of Thursday is weak, right? And so what would it take to break it? Like I said, if it goes higher, this low is weak. If it goes higher and retest it, you may want to consider it to be short and then just kind of monitor for continuation below, because there's not a lot of technical support here. Probably not until you get to the round figure here of 20,000. I would think that might have some impact on the Nasdaq just because it's a big round number. We'll see. Now, in talking about this Nasdaq, this is actually kind of important to note that, see this low right here? This is the January 13th, 2025 low. And in the S&P, right, this is the January 13th, 2025 low. So right off the bat, you want to know what's stronger, what's weaker. And this is actually telling you a lot of information about the market because this selling has been led by technology, and a lot of that is in the Nasdaq 100. And we know that for a fact because some of the sectors this week that have been showing relative strength, they continue to do so. Like, for instance, this is a picture of healthcare today. Not only today, but look at it over the last few days when you know that the market has gone down in this whole time period. Basically, has all been red candles in the S&P, and yet healthcare is up. So there's sector rotation there. There's sector rotation also into financials. Notice that when they double topped off their high, they came down only really kind of sparingly, not a major pullback, and here just kind of holding their own. They actually rallied a good clip early in the session on today, on this Thursday. And then the other one is staples, which is XLP. Staples are just in a pretty mild pullback, and they also were rallying while the market was falling. And this is important information to note. Like, first of all, it tells you that the S&P is obviously stronger than the Nasdaq 100, but it also tells you a lot about the nature of the selling here. I know I've said this a million times. I'm going to say it again. It's not broad-based. It's just very concentrated in some areas, and those areas are heavily weighted in the market, and it's bringing the market down. And if you go further, or I should say deeper, sort of under the hood, you see that also reflected in the market internals like from today. This is a snapshot just of Thursday, but this is really how this internal screen has looked, especially in terms of these sectors here. This is how it's looked for most of the week, where there have been pockets of strength like here and here. That was only down 19 basis and in staples, right? This has just been going on pretty much all week. And this is another thing I was just noticing too, is as you're coming lower, where's the 1,000 ticks? Only here, and then a higher low, just kind of moving higher. And that all has a lot to do with the whole sector rotation going on, because the selling is not broad-based enough. Notice that the breadth was 2 to 1 and about 3 to 1 into the close. And look at your AD here. It's not a very bearish read, less than minus 1,000. And look at how bad the Nasdaq was, almost 2,000, right? So you can just see it very clearly how everything is skewed on that Nasdaq side, basically, in terms of where the stronger selling is happening. But en masse on the New York Stock Exchange, where this stuff is measured from, at least a lot of this stuff, like this, you know, like the ticks right here would be a good example. On a very broad-based measure, they were actually rising slowly into the close with lack of minus 1,000 ticks. And usually on, like, you know, heavier selling, you'll get more minus 1,000 ticks than that. So just be aware of that. And that is basically it. That is the state of the market right now on Thursday. Remember, it could certainly get worse. This is just kind of a objective as possible, you know, statement on where things are right now. And these are the things that I think you need to pay attention to. Remember, when it gets to be worse and the selling is stronger, you will see everything selling, as I always say, right? You won't see any pockets of strength. They'll sell financials, they'll sell staples, and they'll sell healthcare as well, and all of that stuff. But at the moment, that is still not happening yet. All right, so just kind of take it day by day. And as always, be careful out there. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.